Welcome back. You're watching Talking Point, and over the next half an hour, we'll try and build some perspective on the broader markets, the excitement that some people argue exists, while others believe this market looks rather expensive. Earnings season is behind us. The key triggers that will drive us for the near term will remain global. Aniruddha Sarkar, CIO and Portfolio Manager at Quest Investment Advisors, now joins in. Aniruddha, good morning. Thank you very much for joining in. We live in very interesting times. At the start of this month, there were concerns about a global recession, a Japanese carry trade unwind. All of that was done within 24 hours. Then, of course, we constantly argue about how valuations in Indian markets look expensive. PMS's funds are sitting on significant levels of cash, is what I've been told. But the markets have a mind of their own. There seems to be no breaks and no pauses. What are your thoughts?
Yeah, hi, good morning. So basically, I think one thing, it works in the market always. When everyone expects something, it's not going to happen. And practically, as you rightly mentioned, in the last, if I see in the last 4 or 5 months, almost everybody has been waiting for a big correction in the market. There have been times wherein, there were events in the market, both on the domestic side, on the international side, and, there were expectations that markets will fall. But again, as you rightly mentioned, the corrections have been extremely the short-lived. One thing I would want to mention in this is that, and this is something I've been telling investors also, that don't wait for a big correction in the market, because if I look from a 4 or 5 year horizon, I think all the building blocks are in the right place when it comes to the whole India opportunity. And that is where I would say any money which is waiting on the edge or on the, I would say the sidelines, both domestic money and I would say on the retail side and on the mutual fund side, that is entering the market on every dips. Valuations, they look expensive from a headline number, but if I look at individual companies, definitely there's a lot of opportunity. It has definitely become very difficult to make, I would say, easy money in the market. Breadth of the market has gone down. But having said that, I think that is where, the job of portfolio managers has become all the more important, because you can't buy anything and make money in the market in this type of market. You need to be very selective where the earnings are coming from and which sectors to avoid and which sectors to be in, and also at what price you are wanting to buy those opportunities.
Let's start with that then, Aniruddha. Are you fully invested in this market? Because as a PMS fund manager, you do have the option of sitting on cash, and you also have the ability to sit on significant cash if you have to before you allocate to the markets. What is the portfolio stand? How much cash in the portfolio are fully invested?
I normally, on an average, 4-5% is the average cash typically I keep at all times, and I continue to maintain that. I'm not very high on cash at these levels, so I'm maintaining my average 4-5% cash, which I normally do at all times. Having said that, wherever I'm seeing a sharp run up in the portfolio companies where valuations are kind of gone beyond my wildest expectations, there I'm definitely bringing down the exposure. I'm not getting out completely, because many of these companies where the valuations have become rich, interestingly, that is where the highest earnings growth is also coming from. So it's a kind of, you can say the confusion that multiple wise looks expensive, but then when you look at the earnings, that is where the numbers are coming from. So some amount of the weight trimming I'm doing, but not sitting on a high cash.
So where is your biases, Aniruddha, currently at? Because a lot of the stuff that you own, and I want to talk about specifics like a Trent and a Zomato, which keep rewarding investors. And this morning, of course, we have news on Zomato as well. Talk about the outperformers and the underperformers, because I believe you're still holding on to a few stocks that haven't delivered on the market performance.
See, with regard to, if I just begin the discussion from the broad sectoral exposure, and that is where I would say the big alpha creation has happened. If I see in the last 1 year, the big alpha creation has happened from being overweight on the urban consumption story. And both the names which you took, Tata, Trent, Zomato, they have been a part of your urban consumption story. And that is, I would say, where the big numbers have come from. I have been bullish on urban consumption, and within urban consumption, if I break it down into the sectors within that, one is the consumer discretionary, which includes the names which I mentioned. Then the other part is hotels, which has again done exceptionally well. We continue to see a lot of demand on the hotel side. The last 1 quarter was weak because of elections and all, but then hotels continue to do exceptionally well. The third sector where it has again given us good returns is the auto ang space. So auto ancillary continues, auto and auto ancillary, that again is a good space where I would say a lot of alpha creation has happened. and the fourth part is the real estate and ancillaries. So these four sectors are broadly within your urban consumption, and that is where the big alpha has come from. The second major broad allocation, where I would say has done really well for our portfolios and for our investors, is into the whole industrials and the capex. Now, when I say industrials and capex, it includes your sectors like capital goods, engineering companies, power. I've been very bullish on power space, and I think that's one big sector investors, even at this point, should be betting on, because there's a lot of power transformation which is happening in the country. We have not seen this type of a power capex in the country for a long time. So within industrials, you have capital goods, engineering companies, power, and when I say power, it's the whole value chain of power, not just the power producers, but your entire the supply chain, transmission, distribution, wires, cables, transformers, and all of them, power EPC players. And also, we have some exposure into the cement companies, because if you're bullish on infra and the real estate, it's a indirect beneficiary of that.
Aniruddha, you said that you've taken profits off the table on stocks that run exceptionally well. Now, the first stock from your list that comes to my mind is Trent. It's expensive, the valuations look stretched, but the performance has been phenomenal. Will you continue to hold on to Trent, or are you taking some money off the table on Trent?
I'm with you on that, because I think Trent has beaten all our wildest expectations. In fact, when we got into the company at roughly around 1400 odd levels, that was our first initial entry. We had never thought we'll look at this type of a return in such a short span of time. But I think weight management is very, very important. And when I'm saying I'm booking some profits, it's basically the weight management, because anything which goes beyond 8, 9, 10% in the portfolio, typically I try to bring it down. And with the type of return a company like Tata Trent has given, I think if I had not booked anything, definitely the weight in the portfolio would have gone to the mid-teens. Weight management is something I do because valuation check is also something which we need to keep an eye on for the whole portfolio. And barring that, it still continues to be among my top three. And with the type of growth which it has shown in the business, which is the Zodio, it's simply kind of unbeatable by any standards. The next growth which we are expecting, and also the management for the last couple of weeks have been talking about, is the Star Bazaar. And that is again going to be a next big growth driver for the company. So I think it will continue to beat the wildest expectations for the investors.
Another sector that your portfolio seems to have an exposure to is private banks. Nearly 11% of your portfolio is 10.5% is to private banks. Then the top holding is ICICI Bank and HDFC Bank. Do you feel like these are stocks that are attractive even at these levels from the next 6 to 12 months perspective? Or you think there will be better opportunities to buy them?
So private banks in general have been very underweight. Like if I look for the last 4 years broadly, I've been very underweight on the private banks. And within that, ICICI has been my top holding, and that has definitely given us exceptional returns. HDFC is something which I bought in the last 1 year. I have not held HDFC for a long time. It's only in the last 1 year when I entered into HDFC, and that was primarily because of the valuation. I think the valuations at where these private banks are trading today, I think downside looks limited. Obviously, you will not see a multiple expansion from here on, because I see some pain in the banking sector with regard to the NIMS contraction. So you will see the NIM contracting and business growth not meeting the past expectations, keeping the price to book at where it is today. So you see more of a earnings-led price appreciation and not a multiple expansion in the private banks. So I think we have to look at the private banks more bullishly, maybe just 1 or 2 the quarters down the line, where I think you will see the NIMS pressure also declining.
Constructive.
In fact, just to add on that, I'm more bullish on the non-banks. And when I say non-banks, it's the non-bank financials, like your asset management companies, wealth management, insurance, housing finance. That is where my other allocations are.
What about a Nuvama, an Angel One, a BSC, a CAMS? Because that is where all the household savings, I believe, are headed to. Do you not see value in those counters?
Yeah, we have a couple of these names which you mentioned in our evaluation list, but as of now we don't have any of these names. Yes, on the AMC side, I have the Nippon AMC, which is there in my portfolio, and that has again done exceptionally well, being the best. I would say that they have been growing the fastest, and also their portfolios have been doing well, and we know with regard to the AMC business. It's all about, if your funds do well, that attracts more and more money. So I think Nippon AMC has done well, beaten its peers, and that is a good allocation in our portfolio. On the wealth management, we have one wealth company, we have one insurance company, and we had housing finance also, but we booked profit because they had moved up exceptionally fast, and valuations had again become rich over there.
Right. Stay with us. Aniruddha, we'll come back to you in a minute. I think the big story this morning is Zomato and Paytm, and you have both those counters on your portfolio, but I'll come to you in a minute once we just highlight the news. I remember Zomato has been the talk of the town from the get-go this morning. The company has bought the ticketing business of Paytm and made that announcement. The big question we're trying to understand is, has Zomato overpaid for this? Sajid is standing by with more on that. Sajid, what is the thinking behind this? Because since this news came into the market on 17 June, Zomato has seen a one-way journey from 170 to all the way to 270, 275. Finally, the deal has been sealed. Brokerages are constructive on the counter, but I believe you think that they might have paid a bit too much to pick up Paytm's ticketing business.
Yes, the news was out in the market, or the talks were out in the market, but also the fact that there has been a shift in the Zomato business lines as we speak, because Blinkit was showing EBITDA positive. They had made Zomato, its food delivery was making profit, and that was one of the reasons why the stock has been running up. But this acquisition of 2,050 odd crores seems to be on a higher side, given the fact that what Zomato is going to get. It's going to get a revenue of nearly 229 crores, EBITDA which is around 28-29 crores, which gives a 10% EBITDA margin there. But the bigger question is that at the end of the day, Zomato is planning to scale up its entire ticketing and going out business, and it's buying the customers in this deal. The total transacting customers in Paytm today is around 10 million customers as per the disclosures made by both the companies, and which basically means that you're paying around 2,000 rupees a customer to acquire each of the customers, and you don't know whether at the end of 12 months, when the transition happens from the Paytm app to your app or the district app, which will house the going out segment, how many of them will be unique and how many of them will actually get transitioned to district app. That's one of the biggest challenge which will be there for that, and for that you are paying 10 times, or sorry, 7 times the revenue in terms of your in terms of valuation, and roughly 70 times EBITDA which you are paying. Now you can easily argue that from a gross order value perspective, it's nearly 1 time that cash you are paying out to Paytm. By the way, for Paytm, it's a very good thing because they are getting 4x or 5x, nearly 5x returns on the investment that they made in the ticketing business. But for Zomato shareholders, you're paying 2,000 odd crores for a business which you could have invested organically. You have already invested in it, and you could have scaled it up. The very fact that this business is a little tough to scale up is that the biggest player in this market, which is Book My Show, has a revenue of nearly 800 odd crores. It has a EBITDA margin of 13%, and for the last 15 years, Book My Show has been in this market. Though it's a profitable company, it is in one way not been able to scale up to that kind of revenues as Zomato is projecting itself to be, because they are saying that by FY26 or 27, from 2,000 gross order value, they will go to 10,000 crores of gross order value, which looks a far stretched at this point in time, and because of that, it seems that this entire transaction is little overvalued and negative for Zomato, because you are using your hard cash on an investment which you could organically grown, but you're using the inorganic way and paying much more.
Well, the stocks are, I guess, responding to that. Zomato is trading muted while Paytm trades high. Thank you, Sajid, for that. Aniruddha, why don't you share your views on it? You own Zomato and it's been a key contributor in your portfolio. Do you think they've paid too much to pick up the ticketing and entertainment business of Paytm, or do you feel like this is a strategic move that will eventually play its course?
See, I would say that if I look at the management's history, I think they have an exceptional track record with regard to execution. And this whole business, of whether you talk about ordering food or the quick commerce or the ticketing business, it's very difficult to execute. And execution is a big differentiator there. For Zomato, I think definitely not getting into the valuation at what they bought Paytm and whether it's the right valuation. I would say that we need to give them some time to see how this exactly syncs on their platform. One thing which I would say is that Zomato is one app which most of us open almost every day, whether you're ordering on Blinkit or you're ordering food. That is one app we open every day. And if they are able to integrate this whole ticketing business, the whole concept of booking tickets, booking shows and all that on that, the moment you're opening your app for ordering food or ordering Blinkit, if something shows in front of you, there's a very high chance that instead of going to a Book My Show to order to book those tickets, you might actually use Zomato's inbuilt app for booking those events and those shows. So we'll have to give them some time to figure out how they're actually able to integrate and whether it actually adds a good kind of a business model in the long run.
Aniruddha, another stock that had caught everyone's attention on the street in the last couple of weeks has been Ola Electric. It looked expensive before it went into IPO, and the stock has doubled in less than 10 trading days. What is your view on Ola Electric? Do you have this counter in your portfolio? And maybe you don't. And if you don't, would you look to buy it at the right price?
Yeah, obviously, I don't have it in my portfolio, but obviously, when I look at the price, definitely, being on the outside of it seems, we missed the bus. But I think, it's very difficult to justify valuations at times. And, if you're not able to justify valuations to yourself, then, I think some ideas you have to miss out, because I think the margin of safety is very important. And just because a particular concept is doing well and the stock is moving up, that would not be a good reason for me to enter into the business. Obviously, it's being run exceptionally well and they are kind of doing very well on the whole EV on the two-wheelers, but difficult to justify, the valuations at this point of time.
Any of the new listings, IPOs that you're keeping an eye out on, Aniruddha? Because there's this whole debate, right? You and me both discussed about valuation. There might be a little more value in the new entrants or the new debuts on the exchanges before they hit the market. Anything that you've spotted that you like? I mean, Saraswati Sari Depot was on those. You had Orient Tech, InterArc. Anything that you're eyeing or you've gone and subscribed to?
So normally on the PMS, we don't, apply in the IPOs because PMS, you can't apply into IPOs, but we also manage the AI funds. And from that, in the past, we have done a couple of them. We have participated in some of the IPOs. But yes, as of now, in the last, I would say 6 to 9 months, we have not participated in any of the new listing which has happened. There are some good companies which are in the pipeline for IPO. Some of them are in the housing finance. A couple of them are into other engineering and capital good companies. So we are keeping an eye on them. And I think valuation-wise, they look much, much better. So for me, valuation is a very, very big factor before I get into any of the new companies also which are coming. So I would say that we are more confident on some of the good companies which are in the pipeline for the IPOs in the days to come ahead.
Ones would those be, Aniruddha? And I do understand from the AIF portfolio, but what is it that you're constructive on? Anything that you're closely watching?
On the IPO side?
Yes, yes.
So I think one big name which will be very interesting is Bajaj Housing Finance because excellent management and definitely housing finance is one area where I'm very confident, I'm very bullish on. And this whole affordable housing along with, I would say, the penetration, I would say the market reach which Bajaj Housing Finance would have with it has on the ground is something is very interesting to see, and it'll again boil down to at what valuations it comes. We have all the numbers floating in the market, whether it's going to come at this or that multiple, but I think that is one name I'm keeping an eye on when the IPO happens, and it should be an interesting listing.
It should definitely be an interesting listing. Very quick word now from between now, or rather the markets have, and you'd agree with me, borrowed returns from the future, from the way we've had or the run we've seen in the last 1 year. Do you feel that between now and maybe the end of this calendar year, it could be a lot more lukewarm, consolidated kind of phase? Or do you feel like more new record highs are very possible? And also, where do you think the leadership potentially could come from in the next 6 months for the markets?
Yeah, I think in the next 1 year, investors should be aware that you should not expect more than mid-teens kind of a annualized return for the next 1 year. If you get a mid-teens, I think you should be more than happy. Anything in the high single digits to the mid-teens is what index can give you in the next 1 year, and that is, I would say, a very good expectation. Having said that, there are no new sectors which I'm looking at. The sectors which I mentioned, both urban and semi-urban consumption, industrials and capex, will be the two major areas where I think a lot of money can be made. Valuation, one needs to be very aware of at what prices you're buying. One thing which I'm noticing in the market is the breadth of the market has gone down big time. Say around 6-8 months back, almost 62% of the small caps were outperforming the small cap index. That number has gone down to almost like 25 to 30% now. So breadth of the market has gone down. So I think one needs to be very, very careful where you're entering. Headline wise, I don't see any reason why we can't make the fresh highs in the short term also, because I think all the right ingredients are in place.
So, very lastly, do you feel like this impending correction that we've talked about, and we started this conversation with that, is likely? And you did say that these corrections that you tell your clients are now very shallow in nature. Do you think a 5 to 10% or a closer to 10% correction over the course of the next 6 months is even a possibility at this stage?
I would say a 5% correction is very, very possible. A 10% correction for the headline index looks very, very difficult without any external event. External event, we don't know what it will be, because that's definitely always a black swan. But I would say looking for a 10% headline index Nifty correction or Sensex correction without any external events, very, very unlikely. So 4-5% correction is a very kind of, it should be there always. At least the weak hands, they keep moving out, and that's the way the market becomes much better in the long run. But expecting a very big correction in the market, I think investors should not be waiting for a very big correction.
Right. Thank you very much, Aniruddha. It's a pleasure to have you on the show and talk to you and understand the strategy of Quest Investment Advisors and get broader perspective on the markets. Like Aniruddha said, these days it's not big corrections that are possible. You're going to get shallow dips, which usually are getting bought into, as most of the local money is pouring right in. With that, we're completely out of time on Talking Point. Thanks for watching.